Hello and welcome back for another edition of London Direct. I'm back in the offices of Savi Trading and we're going to talk some currencies. Miles, I know you've been short the euro-dollar trade for some time now, but it doesn't really seem to be moving in your favour.
No, we had that big 500 pip correction, which is great. We managed to take some profit on that. We got stopped out on the way back up and now we're fading into this move up here again. As ever, our reasons are clear for why we think you should be short euro on any rallies up from 138 to 140. At the moment there's strong buying on dips. We have got, I think, in 25 minutes some news out from Portugal from the Troika, which could be interesting. And then obviously the FOMC on Wednesday, but at the moment we're sitting on our hands really waiting for a correction which has been long overdue in our eyes. I think FOMC on Wednesday could be the catalyst that I think, as you were saying, maybe Van does a cheeky 5 billion taper, which could be interesting.
But when we talk about Europe, just something like Portugal's not going to turn investor sentiment. It's just a small peripheral nation in the Eurozone. Surely it's pretty insignificant.
Yeah, no, I would agree. Individually, Portugal isn't going to be massive, but there's always going to be contagion fears. You looking back in the past when there's any sort of escalation from one area showing some product problems. So I think if we had some negative news from the Troika, that coupled with some comments from Draghi today saying we're not out of the woods yet, could see a little bit of a squeeze on the downside, and then come the FOMC, if they then add a catalyst to it, you could see a big move on the downside for euro against the dollar. Yeah,
the dollar has been very weak across the board. Are you looking for that trend to reverse, and will it only reverse when the Federal Reserve makes a decision to taper?
I think so. I think obviously we're looking at US data and we get good data followed by a bit of bad data, and I think we need some sustained improvements. I think last month's NFP was good. I think we need another one of them north of 300,000 really. If the market sees that, I think we suddenly look at the US. Looking at a daily chart, everyone says the dollar's weak, but for me it's just range bound. There's no real clear direction in the market at the moment. I think we're seeing big moves because we've got a big longer term range. So I think if you can just sit on your hands and wait for those ranges to reach the extremes, you're far better off than trying to call intraday trend.
Let's move to another active central bank, the Bank of Japan. Abenomics doesn't seem to be going anywhere, whether it's the Bank of Japan or government officials. They're all talking it up. They seem very determined to fight inflation. Do you see this yen weakening trend continuing?
I think at the moment the yen's a little bit overdone on the downside. I think if the Fed do disappoint on Wednesday, you could see some profit taking on a lot of yen pairs. For me, I look at Japan, I look at the America, I look at the Europe, and I look at the UK, and I'm more of an Austrian economist. I don't think you can create supply side reform by just printing money. I think it's structural problems that need to be addressed. So I think Abenomics isn't going to work because fundamentally it can't. But where we go next is going to be interesting. You look at some of the yen pairs and we're at record highs for the year over the last 5 to 10 years sort of thing. So I think favouring selling euro yen, I think that's a good one, and sterling yen as well.
In terms of your trading style, when you look at these record highs for the year for the yen, is that something you take note of? Do you see that as a resistance level, or will it just carry on going up?
Potentially, it's more some sort of maths models looking at basic deviation away from means, regression models, that sort of thing. We do find often when the market does approach these sort of big technical levels, the whole market tends to be in the same trade. I've learned from over the years, try not to be with everyone else because often there is a squeeze and you don't want to get caught in one of those.
Sure. Just to finish off, what are your trades that you would recommend that as we run into Christmas? Obviously things are going to get more and more quiet after this FOMC meeting, so what trades are you looking at in particular?
I like being short equities across the board. I know we've seen a squeeze today. I think at the moment looking to fade into rallies near the top side of all the technical levels. I think the dollar's going to be king in 2014. I think euro is going to come under downside pressure.